Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 6/23/21, show number 290. Well, the airwaves are abuzz with Bitcoin. Man, it broke that 30,000 mark, Nick. What is coming next?
Well, I have to say, yesterday Bitcoin successfully, believe it or not, tested the January 2021 low. It did break below 30,000. I believe it went as low as 28,800. Then it snapped back by the end of the session and finished at around 32,000. So it's important to always watch the daily and weekly chart closes. And that's why I say it's not how they open, it's how they close. Bitcoin had a pretty good flush yesterday, and then it was able to rebound. So I'm going to say right now, the cryptocurrency of the world lives to fight another day. But I do think the 21,000 level looms down the road. But at the moment, it was defended. And, again, that's why it's always important to look at the charts. But, I have to give it credit where credit is due. It went down to 28,800, then it did snap back. So it lives to fight another day.
Yeah, but the trend certainly now it's starting to make lower lows, right?
Yes, and it's a downtrend, a confirmed downtrend. Bitcoin now trades below its 20-day moving average, its 50-day moving average, its 100-day moving average, and it currently is sitting right on its 200-day moving average, which was breached for the first time on a closing basis 2 sessions ago, right on the 21st of June. So I have to say it's in a very, very weak technical position. But yesterday it did pierce that 30,000 level, went down to 28,800, and it got back up. And when that happens, you give it a little bit of credit. But overall, it's a sideways consolidation pattern. And I think traders right now got to be very, very careful in Bitcoin. Maybe there's a little bit more upside to go here. But I think the 21,000 level is coming more and more into sight as we go further in time.
Hey, it was only a stone's throw in Bitcoin terms from that 21,000 level anyway. And the thing is, if it breaks 21,000, where's support then?
Well, there'll be some support at 10,000. But when I did some work on this for a specific person, believe it or not, I calculated 6,300. So that's a long way down. We're not going to talk about those levels yet. But if you fail to hold that 20,000 area, it's 10,000, and then it's all the way down to 6,300, which, by the way, I think 6,300 would be an excellent buying opportunity. So
I love it.
Yeah.
Well, you might not want to talk about it, but I'm putting it in the headline, so don't worry about it. Because that ought to really get the cultists drinking the Koolaid, man. And there's nothing more powerful than Bitcoin Koolaid. Boy, crypto Koolaid, it's sold in your local supermarket, and you should definitely pick some up if you're into cryptos, right?
That's right. I have to say, I can't leave my home without somebody asking me about cryptocurrency. In fact, my 22-year-old nephew yesterday called me up and said, "Hey, is this a great opportunity to buy Bitcoin?" And I just shook my head,
If you're interested, definitely not. And maybe 6 months ago, if you bought it, would have been a great thing, obviously. So the Federal Reserve is walking back. They've seen the carnage that's been wreaked by their contradictory messages, although I don't believe it was an accident that Ballard is saying one thing and Powell is saying another. I think they were kind of testing the market out. But this is a market that can't weather a 25 basis point interest rate increase, Nick, right?
Before we even get to a rate hike, there's a tapering that has to happen, right? So, these guys are printing $120 billion a month. I think that comes to something like $4.5 billion a day or $5 billion a day. The ECB is doing the same thing. So, we have unprecedented amount of capital being created really out of thin air. And again, they're buying mortgage-backed securities, they're buying U.S. treasuries, and they're also buying corporate debt. So, we're seeing really something that we've never seen in our lifetimes, nor have we ever seen it in the history of central banks. So, if they pull away that punch bowl and the tapering begins, that right off the bat takes away liquidity. So this is just a liquidity game at this stage of the game. The reopening and all of that hype, that's over with. I don't even think that's much to do with anything. Right now, it's just all about liquidity in the system.
Hey, I was in New York. I was in Denver. Now I'm in Las Vegas. That's why we're kind of dispensing with all the little frills of our recordings. But everything is running. The places are all packed. But I think the market's already been anticipating that. I think when it's all said and done, when history's written, they'll rename the Federal Reserve to the Weimar Bank and Trust Company.
Well, I have to say it's looking that way. And I never thought, I would say that because to the Fed's credit, they never went to negative interest rates like Europe did, and Europe basically blew up their own bond market. So, again, that helps keep capital flows coming to the United States. That's the only positive I could make out of it. But at this stage of the game, when you get stocks like GameStop and AMC and Costco going up, and then, the meme stock of the day moving higher, this is excessive froth. Just think about the amount of secondaries that are in this market. Think of the amount of SPACs that have come public over the past 6 to 9 months and, made these parabolic moves and then came crashing down. This is what we call excessive froth. And when I haven't seen things like this since 1999, to be honest. And I think it's worse, actually.
Far worse.
Yeah, it's far worse. But, we've never seen the money printing like it is. And in 1999, they didn't print money like this. So, this is where we are. And, again, it's a trader's market right now. You just have to go in there, be a quick trader, operate fast. Don't hold things for the long term, and you get in and out and try to make your money as quick as you can.
Yeah, I think you're correct. So, hey, while the Fed is retracing, walking back, gold looks like it's beginning a new phase up, perhaps, or is it just a bounce?
Well, at the moment, we're going to just say it's a bounce because there was a lot of technical damage done last week on the weekly chart. The one thing I will say, though, is that when you look in and try to interpret these patterns, they take some time to play out. Now, last week, we could have seen the carnage in gold really due to the options expiration. As you know, it was a quadruple witching options expiration. So there is a chance that it was excessive and it was really due to that big expiration that was on board. Again, when you go into these quad witches, they only happen 4 times a year, really into the quarter. And this is something we'll have to evaluate as the charts unfold. But today, gold is having a nice bounce. GLD is up about 0.8%, and you have gold futures today up about 0.75% with a 13-point gain. So nice to see there.
And silver is up nicely as well. It's up over 2%.
Yeah, silver's having a dynamite bounce today. Silver futures up 1.5% as we speak, and then you have the SLV, which is the ETF for silver, up 1.7%. So silver is definitely having a good session.
Yeah, well, it's going to be interesting to see because, like you said, we also had the triple witching hour coming right around the solstice. And,
that's right.
I can only imagine what the vernal or the autumnal equinox is going to be like, because that's right, September and a quadruple witching hour, all those things, right?
Yes, you got to, that's a big time frame when you get into that September quarter, where you'll have a lot of, you'll have the equinox at that time, the autumnal equinox. You'll also have end of quarter as well. So a lot of different dynamics play out. But the one thing I've seen about this entire market, whether it's gold or anything else, what we've seen is the money, we've seen pockets of bear markets in different places, whether it be the SPACs, numerous tech stocks. Tesla is one of them, going from 900 to 500. All these alt energy plays going parabolic, then crashing. Then you had multiple crashes in the GameStop and the meme stocks, and now they're back in play. Micro caps spiked, and then they sold off and they went into bear markets. So we see all of this craziness, but this is all done by the central banks. But I call it a game of hot potato. Money's coming out of one area, then goes into another area, and then flees that area and goes into another sector or industry group. And we continue to see this, and, that's how they prop up the indexes, really. Even take a look at technology today. The NASDAQ is the big winner today. Again, it's only up fractionally, up 21 points. But NASDAQ 100 just made a new high here. And that's been the weakest index of 2021. This is telling me this is a really tired market. Things are stalling and crawling, and I think you got to be on guard. I've been cautious the whole entire year, and I think you got to even be more cautious right now.
All right, stalling and crawling. That's the Nick-ism for the day here. Well, I guess we'll have to see what's going to happen next. I'm sure it's what nobody is going to be expecting, which is why you need to learn how to read charts, which is why you need to go to inthemoneystocks.com and find out how Nick does it. While you're at it, take a look at the Twitter feeds at ITMS, at Nick Santiago01, and at Kerry Lutz. Emails are welcome. When I get back next week, we'll go through the stack. There is a stack, I promise you. The address is KL@KerryLutz.com. Nick, we will talk again in 2 days.
Sounds good, Kerry.